you seem to say that Tesla didn't do anything to address this issue of a demand slowdown. They should have updated the Models S and X. What do you think last night was really about, and why the stock's responding this way?
Yeah, I mean, the event was bridged or pitched as a really Model Y reveal, which it was. But I think people were disappointed in the Model 3 design. It really looks like a jacked up Model 3, very cramped, space. Wasn't really any indication on where this vehicle is going to be made, any sense of the cash needs to ramp up a manufacturing facility for it. The other key point, John, is that the deposit for it's $2,500. Past products and vehicles that this company's introduced was $1,000. So that sort of begs the question of a cash crunch on the company. I think that's the biggest impact to the stock today. But the vehicle in general was underwhelming.
But Jeffrey, it seems like Tesla still doesn't have a brand rival in electric vehicles. I mean, I know other people make them, but it's like individual little vehicles. If you think about high quality or at least high visibility electric vehicles, it's just Tesla. So how much of this $200 price target that you have on the stock assumes that that's still going to be the case in 2 years, or that it's not going to be the case, that they really will have a brand rival?
Yeah, no, exactly. So we valued off of 2020 earnings power, and certainly the lower demand that we've seen in the first 2 months of the year, begs the question as to what the sustainable rate of demand for Tesla is going forward. Now that the deposit base has been depleted, I think that's sort of the million-dollar question: is what is the natural run rate of demand globally? Certainly things have decelerated quite dramatically here in the U.S., but you've got Europe and China ramping up. As it relates to the competitive environment, John, you certainly have the Europeans accelerating introductions. You've seen Jaguar already come out. You've got Porsche coming out later this year. Audi's got a bevy of vehicles, as does Volkswagen and Mercedes. So by 2020, which is really what we're valuing the company off of, the competitive dynamics will be dramatically different. And remember, in 2021, the European OEMs have some pretty stringent emissions rules that they have to meet that, quite frankly, were just tightened for 2025. So while we may be relaxing our CAFE standards here in the U.S., things are getting worse in Europe.
Well, so here's my question. CEO Elon Musk says this model will outsell the Model S, the Model X, the Model 3 combined. Is this just another example of him talking a big game, or did you see evidence of this? I mean, the demand for SUVs in this country is fairly high. Do you see any correlation between what he's predicting and the lackluster reception that the model got?
You know, certainly you are right that the SUVs both here and in China are growing quite sharply. Europe, to a lesser extent, where the luxury market tends to do better. In terms of the uptake, I think the million-dollar question is, because the Y looks really like the 3, is do you see cannibalization? So the S and X have already been in a structural decline. John mentioned at the top that we were disappointed that there wasn't a refresh there, which is definitely the case. I think he needed to see that. But we do see the 3 being cannibalized by the Y, and so, conceivably could the Y outsell all 3? Yes, but the other 3 are shrinking is the problem.
Jeffrey, your point on competition is well taken, but we keep hearing from others on the street that argue, look, Volkswagen can come out too, and GM and Mercedes, and Tesla market share might shrink, but it's going to feed the entire space, the entire category, and that's not a net negative.
No, definitely the category is growing. I think we just were at past 2% global share in many markets for EVs, and Tesla certainly has shined a light on the sector, Carl, that people have an affinity to this type of vehicle, and that adoption across multiple price points can be had. I think the question is, can the company actually make money selling a $35,000, $40,000 car versus what in the past was flowing through the P&L was more of an $85,000 to $100,000 car. And they haven't really shown that, especially in a market without subsidies as the U.S. is becoming, as well as one without regulatory credits, which is a concern for us.
Yeah, it seems like the only time the car is that cheap is when it's announced. When it's actually on sale, it ends up being significantly more expensive. Thank you, Jeff Osborne of Cowen.
Thanks.
We're getting a quick market flash on Boeing now. Dom Chu is back at headquarters with more. Dom, what do you have?
All right, so Contessa, what we have right now are Boeing shares up by about 0.5% after being down by about 2% almost in just about 5 minutes or 10 minutes ago. You can see by that chart the reason why it happened was because of a headline crossing out of French news agency AFP, which cites a source saying that Boeing will roll out a software upgrade for its 737 MAX jet models within it mentions 10 days. Now, that's the reason why those shares have moved to the upside. Again, one source report from AFP, but certainly worth noting that the stock move, Contessa, was pretty major on that one headline crossing. We'll monitor this and bring you more details. Also, we have reached out to Boeing to see if we can confirm this. We'll get back to you with more details on that as well, Contessa. Over to you.
Yeah, a dramatic reversal there, Dom. Thank you very much.